In this session we want to talk about the types and functions of intermediaries. Now, intermediaries are specialist companies that facilitate selling. They have the business contacts, experience and knowledge and operations within the field. So they have all the right qualities to facilitate selling. First of all, they can break bulk. They buy in large quantities and break it into smaller quantities suitable for perhaps for retailers. They distribute the goods to the customers in smaller volumes, and manufacturers benefit as they produce larger quantities. So if we look at those three again for a second, they buy in large quantities, so therefore the manufacturer benefits. The manufacturer has large orders from the intermediaries, and that means costs tend to be lower because they're able to tool up once to produce the product. It's more efficient to produce a large quantity than a small quantity, and they distribute the goods in smaller volumes to, let's say, retailers. So breaking bulk is an important function of the intermediary. In terms of specialization, well, most intermediaries specialize in distributing a specific product. They have the opportunity to develop economies of scale to the distribution channel. So intermediaries tend to specialize in specific products, which means to have expert knowledge of that market. And also, because they have expert knowledge and because they buy in large quantities and break bulk, they're able to develop economies of scale in the distribution channel. So they're able to distribute efficiently. So there are many advantages then to intermediaries. There's also a transactional efficiency. Intermediaries provide products from different manufacturers to satisfy the end consumer. This improves efficiency by reducing transaction costs. So the consumer benefits because the consumer knows that the intermediary may have a wide range of products from several suppliers. So there's another efficiency there, an efficiency in terms of the information in the market. It's easier to get the information because it's coming from mainly one source, the intermediary, who may be buying from several competitors and making those products available in the market. Now, the types of intermediaries, well, agents are a good example. They do not take ownership of goods, but do take commission on sales they negotiate with third parties. So they don't own the goods, let's say, but for agents, but they do take a commission for any sales. Now, these occur normally in international markets and normally for quite big contracts. They are difficult to train and control because of limited physical contact. So the agents are almost free agents. They simply come into the market, do a negotiation, bring the two parties together and take a commission. Normally, as I said, for agents, particularly operating in the international sphere, the commission can be quite large and the contracts very large indeed. Another type of intermediary is the broker. Brokers are involved in negotiating specific deals between buyers and sellers. They have short-term relationships with buyers and sellers, and they act as agents and take commission on sales. They may also act as agents, I should say. So the brokers really negotiate specific deals between buyers and sellers. So they come in and negotiate a deal and take a commission based on the negotiations. Again, it's facilitating the market. It's bringing the two sides together. The internet, well, it covers a large geographic market. The internet is global, so it's possible to trade globally and trade conveniently and easily in a global setting. The products reach a wide range of consumers. Well, depending on what the restrictions on international trade is, it could be a global market. There are low barriers to entry and setup costs are minimal. Well, for the enterprising, the barrier to entry is having an internet connection, which is not very expensive. But it's also having the expert knowledge. That could be a good barrier to entry. Having expert knowledge and contacts within the market so that they are able to act as brokers or as agents. If it's an e-product, for example, some sort of e-service, then it's easy to distribute. Or if it's something which is easily packaged for delivery online, that's easy. For example, music. If music is delivered as, let's say, an MP4 or an MP3 file, then that's easy. It's just attached to whatever it is, or delivered as a download. Another type of intermediary, and one we're more commonly aware of, is the wholesaler. These stock a wide range of products from different producers. They buy in bulk and break down into smaller quantities for resale to the customer. They take ownership of the product and also provide stocking facilities. They reduce contact costs between producer and consumer. So the wholesaler stocks a wide range of products. They buy in bulk and break down into smaller quantities for sale to, let's say, the retailer. They own the products. They buy the products off the manufacturer and stock them. And it reduces the contact between the producer and the consumer. It's a bridge. It's in between the producer and the consumer. Then we've got retailers. Retailers are in charge of selling products and services to the end consumer. They may stock a wide range of products. They take ownership of the product and decide the selling price to customers. Retailers can be a brand in themselves. We can think of high street shops that are brands in their own right. Boots the Chemist, for example. Tesco's it's a brand in its own right. But the retailer deals with the customer. It's the one after the wholesaler. The retailer buys from the wholesaler and sells to the customer. And they own the products in the shop. And they decide the price they're going to sell to the customer. Retailers differ in the type of goods being sold, the type of service being offered by retailers, the size and location of the store, and the ownership of brand awareness. The retailers clearly differ in terms of the products sold. For example, as I mentioned earlier, Boots specialise in pharmaceuticals and related products. Tesco deals with a wide range of products. seems to cover everything, but cover many areas, I should say. But mostly household goods and foodstuffs and that sort of thing. So products do differ between retailers. So the services being provided are different. Also, the size and the location of the stores can be a lot different. And the ownership and brand awareness would be different. Now let's look at the implications of intermediaries. First of all, the impact on the company's current financial position through sales revenue. So they are important for the company in terms of their ability to sell and to make sales further down the line. They influence the range of products that are carried. The feedback information, for a start, on what the market is expecting. They're a good source of information for the producers because they make recommendations regarding the product. They influence the type of marketing, sales and promotions that are undertaken. They make recommendations, and it's in their interest to see a successful product because that is what they're buying and selling. So they want to see marketing campaigns as successful. They influence the company's order processing and order fulfilling policies. Well, they set out what they want from the company, and they make recommendations as to the lead times, the distribution, the information that's associated with the order and how precise that is when it comes to them. So they're an invaluable source of information flowing back to the business. And they also determine and help to determine the reputation of the company in the market, because they are promoting the goods. So indirectly they are promoting the company. So their presence in the market is very positive as far as the company is concerned. So many markets have intermediaries. We've looked at a wide-ranging set here, ranging from agents who may be operating internationally through brokers and wholesalers and retailers, and their importance cannot be overstated. They are very important in facilitating the market. Towards the wholesaler end, it's their capacity to break the bulk and place large orders that keeps costs down. But also they promote the business because they are promoting the product. So their presence can only be welcomed by the business. Well, that's all I want to say about this topic of intermediaries. So we'll leave it at that for the moment. So thank you for watching.